So earnings season starting. A little bit of a bang in the pre-market with, in the after, I just say with Netflix up a lot. We'll get to that in a second. So here's the SPYs making their new all-time high, almost at 246. Yesterday, couldn't get above that. And this morning, kind of a little bit below support from the past couple of days. 245 and a half, 245.40. So we broke out from here. Only about 30 cents to go here, so I buy into this. Couldn't give it much room though for a play back up to 245 and a half. IWM. I bought into yesterday's low just a little bit, just keep an eye on it. So, higher low here, higher low. Let's see if we can get back to 142. What would be different? I guess after 10 o'clock, if it's consolidating, down here and then it breaks to the downside, that would be interesting. Q's finally starting to round their top after going up for 6 straight days. So, the fact that Netflix is up a lot is why it's probably not below yesterday's low, I guess. 140, 142. So, the way I would look at this is if it has a hard down move through 142, and I'd set an alert at 140, 175. And I'd want to see what happens if it retraced up and then failed and took out below here. I would look for a move to there. Well, a lot of that may be dependent on what Netflix does today. All right, HOG. So HOG is getting crushed. It's down a lot, but I think I actually like this for more downside. Here's the daily on it. So it was in this uptrend for a number of years, and it topped out at 75 bucks, then made a lower high at 70, broke this multi-year uptrend, came back up, it spent some time above 60 before recently gapping down, and now, so you basically have this here, which it's below. You have this pivot low here from October of last year. It's gapping below that, and below that it's right here. Basically, it stays in this area, consolidates, and then breaks to the downside. It's really nothing from support until like the low 40s. So it could be interesting to see if it's weak all day today and we actually get a second day to the downside. How would I change on that? Sure. If it actually gets above 48 and a half, 49 area, or it consolidates even up in that area and breaks to the upside, then that would be interesting. But the amount that they guided down on shipments for next quarter is pretty severe, so that's why I lean more towards it coming into this 45 area, 43 to 45, if not today, over the next couple of days. I'm making a call. We're not going to just follow price action. I'm telling you which way I'm leaning. And we need price action to confirm that, though. So initially it goes down. Bottoms at 46.70-ish. Here, volume came in here. So we know that at 8 o'clock when the institution started trading, they bought it at 56.70. So that's another thing to watch. Whether it's the pre-market or after the open, if we have a bounce or something, and then we get below that 46.70, start to hold below that. That should give you more confidence to play the move to 46, 45. Right on the open, if first move is up, I would start shorting it pretty much once it gets above 48. More ideal, you know. I like to get it stretched as much as possible, because we saw the other day, a couple of days ago, was that stock. I shorted at 41 and change. I got the 42.60 before dropping $3. So that's why I like to kind of find areas where I'll be very comfortable shorted, because sometimes you short at 48 and then it gets to 49. Even though it looks like it's going to roll over, you're already a buck out of the money. You don't do as good a job of holding it for the multi-point down move. The next one is Netflix, and ooh, look at this. So Netflix actually failed above 177 there in the pre-market. So news came out, they just obliterated subscriber numbers. The way I look at that, though, is it's a little bit complicated. Like Netflix, NVIDIA, there's a few other stocks that are just pure momentum stocks where they attract certain types of traders and hedge funds that will just push, and they have certain patterns. But I do also like to look at percentage that it's up from kind of the prior high and then like the low from the year. So it's basically more than doubled from the low. Yeah, this was a double here, and so it's gapping higher. And then from the high, the all-time high 18 months ago, it is up about 35%. So it's a good amount, but it's Netflix hypergrowth company, or they're resuming their hypergrowth, I guess, with the international expansion. So it's one of the few scenarios where it actually could sustain a gap like this and go higher before rolling over. So that's a bigger picture. Also, the most common thing, we haven't talked about this probably since last earnings season, is stocks like Tesla, NVIDIA, Netflix, that the top momentum names, they will have, even on days where they're really strong, if this maybe goes to 185 or something, they will have good flushes from the pre-market highs right on the open. So this thing could, well, I guess you can already see it. It already did come off. What did it come off? 79.60. It's not that much, actually. So it came off $3.50 from the pre-market high. It could come off $6, $8. That would bring it down to the 175 area, which would be the natural support. But you could see a multi-point flush below 175. It looks like death right on the open, where it goes to 172, 173. And by 10 o'clock, it could be a 178. By 10:30, it could be 180, and it could go to 184 to 186. And so don't be fooled by a strong flush right on the open. That's just pretty normal for it. We've seen that in Tesla. We've seen it in any type of momentum name, Amazon. The momentum players they'll pull bids right on the open. They get a strong flush. For us, we're reading the tape. If we spot something at 175, we see some bids there, maybe nibble. And then what we look for is, the quick up move. And then when it tries to roll over again, a shallow pullback, and then goes, and then pretty much you look for the bigger up move. So that's kind of, in a nutshell, a common pattern there. Since it rolled over in the pre-market, it looks like 77.5 is the spot. I was short a little bit yesterday from 77.5 in the after, as I forgot I had an offer up. I got kind of lucky that I came in this morning and it was below where I shorted it. Covered it right away, or most of it right away, and then covered the rest when it spiked up above 178.7.5. So let's watch this. This area right here will be kind of our first zone. Once it clears this area here and starts to hold above, start to think about it zipping back up to the pre-market high. And if it sells off, what we'll look for is the hard sell-off on the open and a consolidation. Let's pull up below this 176 support from the pre-market. Say it flushes to down here and then comes back up to this area here and rolls over. So prepared for either direction, but understanding this is one of the few stocks that can be up as much as it is and still have more upside. PBYI. Here's the daily. So we can see clearly when the good news came out was here, back in May, when it went from 38 to 68, and ended up closing that day at 52. That's crazy. Then it gapped the next day, it consolidated for a while, failed at 93. It's gapping up there. This is one of those where it's a widespread and risky, but it has a history of having hard down moves after gap ups. It is a sell the new situation, even though it did get a couple of raised price targets above 100. where it's, you have to see this thing actually hold above 90, 350, 94 to believe that it's going to close above 90. So that's my initial thought on it. The counter argument is it has been up there and it was accumulated for a week and a half here. This is pretty low, these prices here in the high 70s, and it was accumulated higher at 86. So it has spent a couple of weeks being accumulated, like people wanted to own it into this news. So I would give it, it's actually 50-50. So the key is on this to and it was already up at 96 in the pre-market. I guess the key in this one is if it spikes right in the open, you want to nibble short here. Just make sure you cover above 96, or on a down move to 89.5, 90, and then the bottom of this consolidation would be 85, 86. If it doesn't do that, if it just actually sells off quickly, anywhere 88 or lower, I would look to see if people step in and start to buy it. The next one is VNOM. So they did the secondary here. So same thing, same play as every other time we've done it and made money the last year or two. Look at it at the secondary price. If it flushes below the secondary price, I could see it maybe going 30 cents below the secondary before bouncing up to 15. And I'll play that, make that play again. Because again, it's worked every time. XPO, I set this one up pretty well for you in the chat yesterday when I put in that it was way oversold at the bottom. I'm still long a few shares from the absolute low of the day. Let's take a look at it. They announced that they were going to do a secondary and people wanted to sell it in front of it. I thought even 60 was an area where it was a good spot to look to get long, and I did buy some there. I started to get really aggressive into 59.5. Got stopped and then had to buy it back. 59.20 and then 59.15. That worked, and it had the quick pop up to 90 cents, and then it had the accumulation at the half before having the real up move. So I thought this was actually, this is what a clean reversal pattern looks like intraday. A downtrend in the morning, puts in a low on some heavier volume, have the first up move, then you want to see the higher low. You want to see at least 5 bars in the 5 minute. Let's see how many we got here. We got 1, 2, 3, 4, 5, 6, 7, 8, 9 before it started to go up again. So this is plenty. After 10 o'clock, you want 5 minute bars horizontally moving. And then you also had a trigger price above 59.85. That was your confirmation from the first reversal bar. So clean move up to 60.5. I think I had some scripts to sell into 60.50, most of it. And I sold some more, I think, in 60.80. Today, a quick flush down on the open, closer to $60. I'll buy back everything I sold here with an out below 59.80, looking to trade a bounce back up to here. And then, yeah, why not severely? Eric, that's an ADR, so I would skip that one. It's NOI. I'm not even sure that's a REIT. Yeah, I don't really trade REITs that much. They did okay, but they did a secondary. Let's see what they got here. They got 710 million. So what is that? $1? I don't even know what that works out to. 11. Yeah, okay. So it priced at 11.85. So this one's 10 cents below where they priced. And it looks pretty good here, Aaron, like at 11.70. It's 11.73 bid right now. The more it sells off from that 11.70, the more I would just get long it and look for the bounce back up to 11.80 to about $12.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.